Good morning from Los Angeles. Welcome to Power Hour every Friday, 10 a.m. Pacific, 1 p.m. Eastern. Welcome to Crash Friday. Um, you know, I'm gonna start by saying, hopefully, all your accounts are still um, in decent shape. It's really difficult to say that, but um, my channel is pretty new. It's about 8 months old. So thank you for the support. I appreciate it. And I sure hope you guys listened to what I've been saying over the last few months. I don't watch CNBC that much, but yesterday every clown that showed up on CNBC started talking about stagflation. I'm urging you, please, to go to the channel, scroll down a little bit. About a month ago, I put a video out about stagflation. And 4 months ago, I started talking about stagflation. So the issue here is, what is stagflation? Is it fixable? No, stagflation has no cure. Now, the market's pricing stagflation, and the market's definitely now started to price in a recession. So we went from extremes. The one extreme was soft landing. I talked about that 4 or 5 months ago as well. I said Fed has not been able to accomplish soft landing. So that's not going to happen. Okay. The second part was market definitely now wrote off soft landing. It's pretty obvious. Then the new administration took over. Look, this is not political, right? Whatever they're doing what they see fit. They're in charge. Is it directly happening? Is the market crash happening because of what they're doing? I even talked about that as well last month. I mean, I put a thesis together. That's why I thought interest rates were going to go down. That's why I put on my TLT trade. If you're following me closely, hopefully you did the same thing without being financial advice or trading advice. Now, in doing this over the last 30 years, I've seen this movie multiple times, okay? And it helps. It helps to have this experience to draw from something that you can identify with. The movie before was for other reasons. For example, the financial crisis or COVID. COVID was a black swan event. Financial crisis was man-made. Well, this is pretty close to the financial crisis kind of a crash, for the fact that this is man-made as well. So, I'll answer the comments and questions, because I'm going to keep it short today, about an hour, because I have a couple other obligations. Plus, I have to focus. I started actually tiptoeing into the market today. I was about 90+% cash, and I allocated about 28% of the account. I will share it with you guys, and also I will post my positions, open positions. Again, not financial or trading advice. I will post them on the community page of the channel. I do it every Monday, Wednesday, Friday. Go check it out. So I started tiptoeing in. Actually, I did it a little bit yesterday, maybe 8-10%, and another 15% today. But again, cash is a position, 75% cash. I'll wait for Monday, because not much good happens on Fridays, and I sure hope we don't rally today into the close. Now, market's extremely oversold. We get that. It's the rubber band effect that I talk about. It feels like the rubber band broke, but no, it won't break. What will happen is that we will have a massive dead cat bounce like we had after the first leg. Again, if you've been following anything I'm saying, and hopefully you've been sharing it, so this would have kept you out of trouble. Personally speaking, my account's still up for the year, up about 14%. It was up about 20% as of yesterday, but today, like everybody else, I'm experiencing a drawdown, but I'm still up for the year, while some of your stocks may be down 40-50% already. I am not in this business to make friends, okay? I will risk manage probably as good or better than anyone. And having seen the movie before, I will disregard charts because when the market's doing what it's doing, charts are ridiculously unimportant, really. Just, every support level that you see on the chart is going to go right through like hot knife through butter. So charts tell you the past. But now there is a thesis that's created that is economy either slowing down or we're going into recession. Market is the best pricing mechanism on the planet. Market just started pricing in a recession. I don't think we're finished going down yet. However, is this a bear market? I said that already last month. Yes, I think we're in a bear market. Where do I see S&P going down? Probably 4,800, probably another 10% from here. But it will not happen in a straight line, although last 2 days is definitely a straight line. And what I think is going, I'm not super overly bearish. I think, by the way, the best rallies, if you happen to catch a bottom or close to a bottom, the best rallies happen in bear markets. They're face-ripping rallies, and you can trade those. So as some of you may know, I have a trading account and I have an investment account. My investment account is close to 90% cash, but now, probably on Monday, Tuesday, I will start allocating funds in that account as well, because some of the stocks I wanted to buy are actually below where I wanted to buy them, but I'm not touching anything yet. On the trading account, it's different. Although it's a six-figure account, I still trying to keep my powder dry. I put a video out a couple of weeks ago, cash is a position. So as many of you, the YOLOers and FOMOers and hodlers and all that stuff, I don't pay any attention to any of that. You got to risk manage. You got to take small losses, and you got to keep your powder dry for occurrences or occasions like this. So what am I getting into? When I put the position screen up, I'll show you guys. Some of you may be doable for you, some not. Again, if you're going to follow at your own risk. This is not trading or financial advice. I'm nimble. I'm able to watch it. Some of you may have jobs. Maybe you're not able to watch every second. Especially if you're dealing with derivatives like options, they are moving fast and furious. I'll talk a little bit about VIX, right? The volatility index. Today, I think you're definitely, breaking out. So VIX is a inverse indicator, right? VIX goes up, market's going down, but then VIX gets to 50, 60. We're pretty close to a bottom. So the rubber band theory is that we're stretched as far as we can. We bounce, we go halfway. It's like a bungee jumper. The first drop is the furthest, and then they'll bounce about halfway. But then when the market took its first leg down, which went down about 10% and then bounced about 3-4%, it kind of showed what kind of anemic rally that we had. We call it dead cat bounce in the business. We rallied back to exactly where we should have rallied and rolled over, and now we're getting the crash. Now, there's no sugarcoating in my world. This is a crash. You guys can say, oh, I'm fine. Long term, I'm fine. Good. Wonderful. If you're young, unlike me, this is the time to dollar cost average. Yeah, absolutely. Today, especially. But I think market's going to be, again, like this, probably on Monday, and then somewhere around 8-9 o'clock Pacific time on Tuesday, we'll have a short-term bottom. That's why I only allocated about 25-28% account, because I don't know where the bottom is. If anybody says, or I know where the bottom is, I'm like, they're lying. There's just no thing. There is no, I'm telling you, run the other direction. I don't know where the market bottom is going to be, but I see the whites of their eyes, as we used to call it on the trading desk. When you see that, you need to step up. And most people, this is the time that they don't step up, because they don't have the cash, they have had massive drawdowns, they had margin calls. I don't want to say I told you so, but it's unfortunate, right? But let's get back to the thesis real quick, because as I said, I'm going to keep it about an hour today. So what's the thesis? Okay. Now we have, in fact, I put a short out today, and I scheduled these like from a week ahead. It's ironic that the headline of the short was Powell and Trump are headbutting, or Powell and Trump are not agreeing. Well, Powell had a speech today. In it, he said tariffs are going to increase inflation. We cannot cut interest rates. Well, Trump tells Powell cut interest rates. Well, market's doing it on its own already. So, but the reason the market's lowering interest rates is because there's something called flight to quality. Okay. And when there's flight to quality, you know, what happens? Interest rates go down, but when the market rallies, you know, interest rates go back up again. Our interest rates fundamentally cannot go down until we take care of our deficits and debt. Doge is doing it. Are they going to be able to? I am really not sure. It's too early to tell. But my thesis is the administration intentionally is trying to slow the economy down to lower inflation. But then on the other hand, they're putting these tariffs on. I did videos about tariffs a long time ago, 4 or 5, 6 months ago, when Trump was on the campaign trail and was talking about it. And look, you voted for him, you didn't vote for him, that's not the point. The point is he's doing exactly what he said he was going to do. Period. This is all, you know, a lot of the pundits on CNBC are saying, oh, tariffs, tariffs, tariffs. I'm like, the guy's doing what he said he's going to do. He's delivering on his promise. Is it good for the economy? Is it bad for the economy? I said, if they put tariffs on, prices are going to go up. That's going to refuel inflation. That's going to put the Fed in a box. If there were no tariffs and this was happening in the market, Fed would be in the market right now, right? You know, through repos and through buying CMBSs, MBSs, that would be pumping liquidity into the system. Well, Fed is in a box now. Fed goes, no, we're going to watch, you know, data and we're going to act accordingly. Trump goes, see, what Trump is doing is what he's doing, what he's wishing for, which is lower interest rates, which is a good thing, versus what the action is. The tariffs are just countering each other. You can't have tariffs and lower interest rates, because if you put on tariffs, interest rates are going to go up. It has to go up because inflation is going to kick in. And just when the Fed was controlling the inflation part of the puzzle, you know, when they raised the rates from ZIRP for 15 years to 5.5%, that's because inflation got hot. Why? Because during COVID, they printed 7 trillion, pumped it into the economy. So just when they're trying to do, you know, lower the balance sheet, actually they have lowered the balance sheet by about 2 trillion, and start lowering interest rates again, which they started doing in last September with a 50 basis point cut, the market did not buy it. The interest rate market, bond market, actually the rates went up, diametrically opposed to what is the Fed trying to do. So Fed is in a box. Fed cannot do much. So if you guys are hoping for a Fed put, good luck. So now the market is definitely agreeing with my thesis of, yeah, the economy is going to slow down. Well, our economy is 80% consumer spending. Consumers already stretched really, really, really tight. They've suffered inflation effects over the last 3-4 years. All their credit cards are maxed out. You know, I've done videos about it. Go check them out. You know, look, I do the channel because I do understand this. I'm a pretty good reader of the tea leaves of what's going on. And I hope it, you know, I wish it got more coverage, but I really don't care about YouTube that much. But I just want to, you know, put it out there. Maybe it'll help some people, maybe it won't. But so if the economy is going to intentionally get slowed down to lower inflation, you can't put tariffs on the other end, because that's going to push up inflation. Is this short-term pain for long-term gain? This is a big, risky thing that they're doing. I sure hope they know what they're doing, because they said, okay, we're going to get this bloodletting out of the gate, right? The first 6 months, 8 months, a year, it was going to be tough. But then when Trump is done with the 4 years, he's going to hand over to the next person in the Republican Party some wonderful economy that's pumping on all cylinders. Is it enough time? Because look, this is not, you know, running Twitter. This is not running a company. You cannot run a country like you run a company. If this was a company and I was the CEO, I would do exactly what they're doing with the government. What would I do? I would just lay off people, right? Lower the cost of doing business, replace them with AI, whatever it is. And that's reality. That's the reality in the corporate world, right? It happens all the time. And then when that happens, company becomes leaner and meaner. But you cannot run a country of 365 million people as a corporate, you know, structure. You just can't. So again, I'm not complaining. I think what they're doing is necessary, but the effects of it is now what the effect of it is. Fed is in a box. They can't do much. we are also creating this hostility now, right? We're like two kids in a fight. Oh, my dad's going to come beat your dad. This is getting a little ridiculous as far as I'm concerned. But first time though, what is happening? Europe is coming together as broken apart as it was. EU is coming together. So Trump goes, F you, I'm going to put the tariffs on you, right? Europe is joining with Canada and Germany and England and France. They go, okay, F you back, Trump. We're going to put the tariffs on you. The reason the market's crashing today is because China said, oh, F me? Okay, I'm going to put 35% tariffs on you. Not that they buy that much from us anyway. So the point here is now, who needs who the most? I still think the globe needs us. We're the financial center of the globe. We're the easiest to do business country on the planet. I just bought and sold something. I don't know what it was. But the thing I'm saying is that I think they need us more than we need them. But then when you do it saying that my bazooka is bigger than yours, and then they go, no, okay, now what's happening in Asia, right? First time, Korea, Japan, and China are coming together. So all we're doing is now creating this animosity, and it's going to hurt everyone. Look, it's going to hurt the American consumer because prices are definitely going to go up. It's going to hurt everybody's retirement plan, 401k, because I actually did a video. Go check it out. The title of the video was Everybody in the Pool. This was about a month and a half ago. And there were people partying in a pool. What does that mean? When everybody is in a pool, how much more can the market go up, right? So everybody is committed. Retail is committed. Retail got blown out already, most likely. So 401k, reports or 401k statements are going to go out now. People are going to look at it in disbelief, okay? They're going to go, oh shit, my retirement. So passive investors are probably going to exit the market now to a certain degree. So is it all bad? No, it's not all bad. Again, if you look at it overall picture, yeah, economy is definitely going to slow down. Market's going to price in a recession now. By the time market prices in a recession, we'll probably be down about 25-30% on SPX or S&P 500 from the highs. Where will that put us? I've been saying this. I have a members group. I don't think anybody's listening there either, because it's gotten really quiet there, like crickets, because I think most of them blew their accounts already. And they're like, okay, what's 30% from the high? 6,100, right? 1,800 points, 4,800, 4,500. Yeah. See, the other thing now is going to happen. See, everybody's thinking now this is going to be like a V. We're going to go crash and we're going to bounce, just like we did during the pandemic. No, that's not going to happen. That's not this movie. If you guys go back and check out what happened in 2008, this is very similar to GFC. Different circumstances for sure, but in a good way and a bad way. So the real estate market is not shaky yet. Well, I just bought and sold something else. I don't know what's going on. But the point I'm trying to make is, if they slow the economy down, market's going to price in a recession. Market could be right, market could be wrong. You can argue with the market until you're blue in the face. Market does not give a shit who you are. Okay? You need to look out for yourself. You need to manage your risk properly. If you have a drawdown of 50%, it's because you're in a 3 beta stock. When the market goes down 15%, your stock is going to go down 50%. No ifs, no buts about it. You can say, oh, but it's fine. Long term, it's going to be all right. Yeah, long term, it's going to be fine. Yeah. But if you blew your account and you don't have any ammunition to go long term, these types of markets, you know what they do? Traders become long-term investors in this type of market. I've seen this picture a million times before. People go, I'm a great trader. I'm like, okay. Are you up for the year? I don't think so. So this is the movie. The movie is market's going to price in a recession. If the recession does not happen, then we will have a massive bounce. If the recession does happen, a lot of damage has been done. Market's going to need to base. We're going to go sideways, and there's a different strategy for that. And there's always a different strategy for different things. My goal is to keep my head straight. My goal is to keep my shit together and try to help whoever is watching by the 20s and 50s or 100s, or whatever it is. So, but I'm hoping that you guys share, right? And then maybe your family will take advantage of it. But I am I upset at what's going on? No. Ultimately, people make decisions, people make their beds and sleep in it. The administration is making their bed and now they're going to sleep in it. And I think it's very, very risky what they're trying to pull off. So what they're trying to pull off, I also figured that out already. What they're doing is slow the economy down, but then on the back end, deregulate, okay? We're going back kind of to the trickle-down theory, which that never works. Trickle-down does not work, okay? All it has is the top 1% keeps accumulating more growth because now they have the liquidity. They're not the ones that are going to go broke, right? The average American suffering inflation effects, all the stuff, they're the ones that are going to suffer, not the top 1%, 2%, right? So again, I'm not a socialist. I'm a capitalist. I trade every day. But I'm seeing this picture, and I wish all of you could see the same picture that I'm seeing and act accordingly. And if you did blow your account, sorry. But so yeah, that's where we are, man. I think I'm hoping long term it's okay what they're doing for the country, because I care more about them than what my stocks are doing in my trading account. I'm okay personally. I'm just, I hope all of you are as well. And but one thing I have to emphasize, stocks are to be bought and sold. Stocks are not to be, the old adage of, first of all, if this is not, by the way, proving, I have another video, go check it out. The title is Stocks Walk Up the Stairs and Take the Express Elevator Down. If this is not the express elevator down that I've been talking about since I started the channel, then I don't know what is, okay? But stocks are to be bought and sold over long periods of time, okay? Does the market do better than any other investment? Absolutely. But do you want to buy a stock at 5, take it to 15, ride it back to 5? Why would anybody do that? I don't want to do that, okay? Now, if you say, Sergio, look at the Mag 7. Okay, let's look at the Mag 7. If you've been in the Mag 7, even with these massive drawdowns, okay, would you have done well? Absolutely. But if you tell me some other Joe Schmo stock, a secondary or tertiary stock, a small cap, mid cap, they're getting decimated. Decimated. Those are the ones that are going to go from 5 to 20 back to 5. And then now you're going to hope you had a 4X, you let the 4X go. Now you're tied up. Now you're not going to sell. Or even if you bought something at 15 and it's down to 10, most people don't sell. Most people don't take the loss because they go, oh, I know better than the market. 14 to 15 to 10 is cheap now. 20 to 10 is cheap. No, that 10 is going to be 3, right? So to me, the important thing is preservation of capital. If you're a trader, completely different story. If you're a trader, I'm pretty sure you blew your account because all these hodlers and YOLOers, they're all used to the market. Market only goes up. Stocks only go up. Like, no, stocks only don't go up. I sound upset because I'm upset because I'm like, why are people doing this, right? Turn your computer off. Go away. It'll be okay. You don't have to trade every day. But long story short, we're in a bear market. The definition of the bear market, according to CNBC, is when we go down 25%, that's when we'll probably bottom. So when Kramer panics and says sell, buy. Period. There you go. That's your best indicator right there. And he hasn't done it yet. That's kind of making me nervous. That's why I'm thinking we'll have more to go. I'll go to my charts. I'll go to my positions. Look, I am completely okay with what's going on. Will I be red at some point? Yeah, if the market keeps doing this and I keep taking cracks at it, even with 25% allocation. Like yesterday, I sold some puts on SOXL. When it was down 40%, it's down another 20% today. Of course, I'm going to lose money, right? But then I'm not putting everything I have in it. So I scale in. Will I take losses on that? Probably, because I did the 13 puts. This thing is down to 9. Do I want to get assigned at 13 less the premium? No, I'll show you guys what I'm doing. I'll probably roll while we're talking about it. I had one trade that I could not allocate as much as I wanted to because it moved too quick. It was the TLT trade, which I cleaned up, made some good money on that. And if you were following me, you know what I'm talking about. I'll go through that as well. I'll go through some charts. I'll answer the comments, and then I'll be done at 11 today because I have an engagement at 11:30. Yeah, man, that's where the market is. I'll be back on Monday with Trading with Sergio. Oddly enough, if you remember on my channel, in my chat group, Telegram chat group, I wasn't joking. A member said, where could this go? I go, why don't we do this? Why don't we go down a few percent more tomorrow after what happened yesterday, which was 5-6%, and a few more percent tomorrow. And Monday we go limit down at 7%. First time, by the way, that's a circuit breaker. We have a 7% circuit breaker. If we hit that, they hold trading for 15 minutes or either 30 minutes. They open the markets. If we go down 10%, that's the second circuit breaker. So get used to it, people. I can't believe I'm mentioning circuit breakers, but that's what the rules are these days. We'll go down 10%, halt another 15 minutes or 30 minutes. We open. If we go down 15%, trading will be halted for the day, and then we'll come back again tomorrow. That's where we are at the moment, right? By the way, the sell-off has been completely orderly for the past, I don't know, month or so now. Today, we're getting a little out of control. How am I seeing that? I'll show you guys the VIX chart, and I kind of correlate between the two, the correlation. And yeah, today we're getting a little, today is the day, that I see the rubber band is getting right about here. So we started here, we're about here, we got to go down to here maybe, and then we bounce. We let it go, we bounce back. Hopefully we bounce back halfway. And last but not least, I said this for 2 years, 2023, 2024. Every dip buyer made money. I sure hope you kept that money, because on this one, if you bought every dip, you got smashed, especially if you allocated incorrectly, especially if you sized incorrectly. Okay, so my point on all of this is, if you're a trader, you got to treat things differently. If you're an investor, you got to treat things differently. Is this giving a chance to a lot of the long-term investors to dollar cost average, especially if you're young, and start now, start today? Okay, every Monday or once a month, put some money aside, start DCAing into the S&P 500, because I still believe that our system is the best system on the planet. I still think we're going to go back up at some point. The damage has been done now. This is going to take a long time for this damage to get cured. And why? Because this is the economy, stupid. I mean, that's what it is. Remember that line by Clinton to Bush? It's the economy, stupid. It's the economy. Market's pricing in a recession. It's going to price in. It hasn't priced in a recession yet. We're on our way. And maybe the market is wrong. We'll find out. But if you buy every time the market goes down now, you're going to get nailed. We'll go through some charts, and I'll show you guys some charts. Let me get my phone, look at my watch list. But I am kind of getting my, I don't know, shallow end of the pool. I'm not even sure if I'm doing the right thing or not, but I'm allocating about 25% on my trading account. Investing account, nothing. So let's take a look. Vic, good morning. M-Card. Well, you voted this, so suck it up. It's nothing to do with who I voted for, or I froze. Did I get cut off? I'm not even sure now. No. Okay, I'm fine. You voted for this, so suck it up. No, I'll suck it up. I have no problem sucking it up. Irving, good morning. Zavan, good morning. A member, after the crush, it's going to take years. No, I don't think it's going to take years. Yeah, Marcio. Although Nike's up today, supposedly Trump is Vietnam is negotiating with him. And I mean, I wanted to sell cash secured puts or sell naked puts on Nike today, and then it bounced. John, good morning. Yeah, a lot of traders become long-term investors. They're called bag holders. Tahoe King says, good morning. Adding, yeah, well, that's one thing, actually. That's a good point. I forgot to mention that. Bitcoin is not crashing. Okay? So, Is it decoupling from the market? Because Bitcoin is holding about 80 to 83,000. Now, is it Michael Saylor holding it up? I don't know. But I do have a position in MSTU. I was hoping to get called away. I guess I'm not going to get called away. But yeah, man, I'm about 74, 73% cash. And even with that 25%, will I lose money? You bet, because they're in derivatives. Why did I do it? It got to levels that I thought was okay. So if I'm making that mistake, well, I can imagine what you guys are doing with your portfolio. So let's go to the charts and my portfolio. Hope you guys can see this. Let's see what the bing was. What did we buy? Okay, so let's start at the top. I'm long only 1,000 shares of MSTU, which is the 2x ETF of MSTR. It's 505. It's down a few pennies today, or down a couple of percent. I had bought the stock at 530 and 5. Cost is 515, but I sold expiring today. 550 calls at 50 cents. I guess I'm not going to get called away unless they have a miraculous rally and we go up. Okay, so I'm buying a lottery ticket. This actually I like. I will keep buying it. So far I have bought 225 of Google's 2x ETF, which is GGLL calls. My cost is about 40 cents. They're 30, 35 cents. I will buy those on the bounce. These will probably double. But again, it's for a trade. Not in love with it. Don't hate it, but also not in love with it. Yeah, I must have been dead, I guess. So I'm up to 225. I have more orders at 30 cents, more orders at 25 cents. This is the type of stuff I'm buying. I'm not going spending like $5, $8, $10 per option because implied volatility is so ridiculously high. You're gonna, even if you make a directional bet, even if the market goes your way, you're gonna be wrong. I have 35 Google. Yeah, Google's actually holding better than most, but then still going down. I had 100. I sold some this morning, actually, with a profit. I don't know how I did that, but I did. I'm down to 35 options. June. The Google 2x ETF of Google is the 45 calls. Stock is 25. You're gonna say, sir, just so far out of the money. That's okay. This is July. I'm buying the July. So, this rallies to 32. The Google rallies 10 points. This will rally 20%. It'll get to 32. Those options will be about 80, 90 cents. So that's why I'm doing what I'm doing there. Google options, I have them for sale at 45 cents, which is break even. Here's the big F up. So I probably will roll these while I'm talking to you guys. I know what the thing is. I just started buying NVDL, which is the 2x ETF of NVIDIA. April 17th, expiring in 2 weeks. 35 calls. Stock is 27.5. I bought them at 70 cents, 65 cents, 60 cents. I'll put another order at 55 cents. These are the things that I'm buying. But the big F up is SOXL, right? I sold 13 puts this, sizing correctly, of course. But today, actually, while I'm talking to you guys, I will roll those. Then I added 12 puts, 11 puts, and 10 puts, selling the puts. I'm putting in a synthetic position, selling the puts, buying the calls. Obviously, the calls are going down. The puts are going up when the stock goes down. Okay, well, what does that mean? Losing money. Sure. Well, it's okay. These are May 16th expiration, next month expiration. NVDL, I just started buying. So I bought 30 of them so far. And this morning, actually, this position, I like this position the most, actually. I like the stock Robinhood. Of course, it's going to go down when the market goes down, but the 2x ETF of Robinhood is ROBN. So on May, I'm putting a synthetic on Robinhood. I am selling the 10 puts and buying the 15 calls for May simultaneously. At the moment, my cost is $3. So I was able to do them for $3, but then the calls cost me $1. So with a net credit of $2. Stock is $8.12. I'm doing the 10s. on this, on ROBN and SOXL, I am 100% willing to get these shares assigned to me. Okay. And on the bounce, I'll clean them all up with profits. But at the moment, I'm 100% willing to be assigned. If you're not willing to be assigned in this type of market, do not sell puts. You will be in the money. You want to try to roll, and you're going to suffer. So if you're selling puts in this type of market, God help you. Good luck. So, and this is my TLT position that I closed out today. I bought the puts back. These were March 2026. I cleaned the position up. Really good trade. Probably made like 4 or 5 grand on that. I'm going to put it back on again because this became too much of a flight to quality trade as opposed to my thesis trade, which is, you know, please go watch the videos. I don't want to go through it all over again. So yeah, that's where we are. I will definitely, you know, while we're talking, probably I will roll these SOXL, SOXL, which is the 2x ETF of SOX, semiconductor index puts. I will roll the 13s down to 10s and 11s. We're at 9 already, so I'm not, you know, on the bounce to 11. The puts will go down, calls will go up. That's why I'm doing what I'm doing. I'm just kind of picking my spots, buying these cheap options that will double. A double is a double. I can buy 50 of a $5 call, spend 25 grand, and that will go to 10. Or I can buy 250 of a 40-cent call, and that will go to 80 cents. It's the same double. Double is double. It doesn't make any difference. The amount of dollars is less at risk with cheaper options because, as we know, so if I'm buying the Google 2x ETF July calls, I have time until July. Are you telling me that the market's not going to rally between now and July? Of course it is. So that's the whole idea here. Put up a little, try to get a double out of it. That's it. That's all I'm trying to do. I'm guessing a 74 or 73% in cash. I will allocate more on Monday. I sure hope market does not rally today. I hope we open down another 5% on Monday. And then I will add to the same, and then I will add to new ones. Maybe I'll look into SoFi. I mean, that's getting smashed. I do like the company, but, you know, in this kind of market, you like, you don't like. It doesn't really honestly make any goddamn difference. So let me look at some charts. Charts mean nothing in this market, honestly. You know, here's charts. What charts? It's like goddamn waterfall. Okay, that's NVDL. Look at that thing. I mean, that thing was like $40 3 days ago, right? That's the 2x ETF of NVIDIA. We're 26 today. Okay, there's other disasters that I will share with you guys in a second if my fucking computer doesn't freeze. All right, so let's take a look. Let's take a look at all this. So this is NVDL. So will there be a bounce like this? Yeah, there'll be a bounce, hopefully short-term bounce, and then I get the heck out of those options. Those are the April 17th. They will be the first one to sell. So let's look at SPX or SPY, whatever. You can look at that thing. I mean, we actually hit the measurement to the dot. I actually measured from this high to this low, and then you put that number to this high that we had, which was 578. I measured to about 510, 513 range, and this low right here, if you guys are following the screen, this low right here is about exactly that. We kissed that low and we're bounced. It seems like we're bouncing a little bit. I don't know. Let me take a look at the 2-minute chart. Yeah, look at this. This is open and down. Yesterday, open and lower, open and lower. Yeah, I mean, look, we're oversold. We're going to bounce at some point. Okay, great. Well, I'm playing the bounce. I'm not in love with anything I'm doing. I'm just playing the bounce. I'm trying to get up to 25%, plus 25% for the year. Once I do that, I think that'll be a miracle in this type of market, but we'll see. So that's SPX. This is triple Q. Disaster. You know, let's look at the daily. I mean, again, you know, once in a while, look at this thing. I mean, we're 540 high. We hit today 430. What is that? 110 points. About 20%-ish. Okay, cool. And that also came in, you know, into support area. Again, if you're looking at charts, next level of support probably going to be 415 on this thing. I mean, look, man, You know, both of them are hit their measurements. If you guys recall, watch any of this stuff, channel broke, we broke the channel, bounced to the channel, lower. That's technical analysis. Again, that's what happened in the past. Is this telling me what's going to happen tomorrow? Absolutely not. But I do pay attention to it because millions of other knuckleheads pay attention to it, and then they draw like 80,000 lines, create biases. I ain't the type to do that kind of thing. Here's my TLT trade, which worked out beautifully. I will definitely get back into TLT. If I see about low 90s, I'm getting back into the same ones, but different strikes this time. So I had structured that. I had sold the March 26 85 puts, had bought the March 2026 95 calls, and had sold the 110 calls against it with about $1.25 credit to the put side. When I exited this morning, I exited at $1.70 to the call side. So that's 3 points on TLT, again, which was a good trade. I don't even know what else to show you guys. Oh, let's look at VIX. Let's talk about that. You guys see what's happening to VIX? Okay, so you might yesterday market was down about 4.5%. VIX was still under. Do you guys see the spike here at 65? That's the Japanese yen carry trade crisis. Okay, now if you go back a couple 3 years, and actually I'm going to go back a couple 3 years. See VIX every time it bounces, that means it's a short-term bottom. But if we go back, 10 years on VIX, you guys see this high right here in 85? It got up to 85. That's the COVID. Okay, that's the COVID high. So at 40, 43, we're really not that high. I mean, if we get into the 50s, 60s, then I know we're for sure very close to a bottom. But that's when things break. Okay, and just like today, that's where things break. And VIX was like minding its business between 20 and 30 until this morning. When we get down this morning, boom, VIX is up now. So we're pretty close to a bottom, and now going forward, VIX will be in a higher range as opposed to 12s, 14s everybody is used to. That ain't going to happen for a while. And if you look at VIX long-term max, right? So our tops are usually like our calamity tops are about 80. This is 2008, 80s. Japanese yen carry took us to 60s. I'm pretty sure we'll get, if we have a crash, another crash on Monday, we'll get into the 50s, 60s, and that'll be that's why I'm kind of calling for a bottom on Tuesday around 8, 9 o'clock Pacific time. Do I want it? No, man. Do I want any of this? Of course not. Am I frustrated? Yeah. Why am I frustrated? Okay, number one frustration. Why am I not short 100%? That's my frustration. Why didn't I like quadruple my account in the last month? That's my frustration, not because whatever. But at my age, just kind of go, hey, man, if I can make 20, 30% in my trading account while the market's down 30%, I did fine. What are we looking at? I don't even know what we're talking about here now. Okay, well, let's look at the long-term charts of SPX, which everybody cares about. This is just 1 year, 1 day. Let's look at 1 year, 3, okay? Look where we are. I mean, yes, it's a massive pullback, 61.50 down to 51.50, about 20%. But so when we hit 25%, CNBC will say, okay, we're in a bear market. That'll probably be the bottom. I was talking to some of my members yesterday. So let's look at longer term charts, okay? You guys see where the 200 EMA is on the weekly? It's down to 475. If we get to the red line, I will commit 100%. I won't go into margin, but I will commit 100% on my account into the market. So we're 515, 474. What? It's not that far. It's another 10% from here. So, I mean, yeah, got it once in a while. You got to look at long-term pictures. We got up to 6150, 4,800 to 5,000. I think is where we're going to go. At that point, market will price in the recession, and then it will wait. It will bounce, of course. It will wait. It will retest. What will happen is that market will figure out how deep is this recession going to be. Is it a recession? Luckily, recessions last about, I don't know, 12 to 18 months, and bear markets last about exactly that. So market is doing it before the recession shows up. What is the definition of technical definition of recession? 2 negative GDP quarters in a row. Well, one's coming up now. If you guys listen to me at all, Atlanta Fed keeps cutting their GDP growth. The first one is going to come up shortly. In fact, market will go down, but it's going to go down. Again, it's 6 to 8 months ahead. Okay, so market is signaling now recession. It's getting priced in. If we don't get a recession, everything is great. Green light, we'll go right back up. But if we do get a recession, then the market's going to evaluate how deep of a recession it is, what industries are going to get hurt the most. And we'll see. We'll see where we're going to go. But, you know, the price is correct. You know, don't argue with the price. So this is the COVID low, by the way, people. COVID low on SPX was 2163. The high was, before COVID hit, 3444. So that's 1,200 points. That was about a 30% haircut, okay? This is when the Fed started raising rates after 15 years of ZIRP, okay? That pullback took us from 4,800 down to about 3,500. What is that? That's about 1,300 points. That's about 25%. Well, this one, we're about 18, 20% now. Okay. And you guys see this during that time, how the rallies are face ripping, right? I said this in my chat group, Telegram chat group. Oh, if you want to become a member, please click join and become a member. I'll send you that information. I'll also give you a free #KnowYourWorth t-shirt that I'm wearing. And I do live streams every Wednesday for members. I'm hoping they're benefiting. If they're not, I don't know. So everything is negative. I mean, MACD has turned down on the weekly. Monthly is negative. You know, charts are going down. It's a downtrend. We've been in an uptrend forever. A little short-term blip here. Again, you know, once we get down 25%, we'll see where we are. But while you're going down 25%, you're going to say, Serge, yeah, market's down 25%, but my stock went down 80%. No shit. Because if you're dealing with 3 beta stocks, that's what you're going to do. Here's Mag 7. Look at these charts. Look at this thing. This is Apple. 3 days ago was 226. We're 191. Where is it going to go? I don't know. If you believe in charts, there's gaps here, whatever. So maybe 168, 170 when we're done. That's Apple. Okay. This is NVIDIA. There you go. Look at it. A week ago, 8 days ago, 120. We're at 95. 25 points. Any way you look at this, it's a disaster. Where is NVIDIA support? I don't know. 80? Right about here. And then you're going to say, well, Serge, you're talking both sides out of your mouth. You're buying calls. Yeah, I'm buying calls for a bounce because I think there's going to be a bounce about 103, 105. Hopefully 110, and then the NVDL, which is the 2x ETF, will bounce, and then I'll double my money. That's all I'm looking for. I'm not looking for anything. I'm not looking to buy and hold. I'm not looking to get married to anything. First support is about 90-ish, 90 even. We're at 94, so maybe it's got another 3% to go next couple days, and then we'll get a bounce. So that's NVIDIA. This is Google. You know, some of these are really good buys for long term, by the way, people. I think Google is the cheapest Mag 7. Google is into actually long-term support here. Again, if you believe in charts, 148, 150. Today we hit 148. We're bouncing a little bit. We're at 150. Google was 208. We're at 150, down 25%. Okay. Well, let's look at those. Yeah. How much is triple Q's down? About 18%. Okay, the beta is not high on this. Let me show you guys some high beta stocks. Affirm. I like the company. What do you guys think about this? Okay, last earnings quarter was right here. Blew out earnings, 82 high. We hit 31 today, down 50 points. Yeah, well, what is that? 50%? No, more, 60%? Nothing has changed with the company. But now it's pricing in that earnings are going to go backwards. That's the last thing I'm going to talk about when I put my face back on the screen. I'm going to talk about the PE ratio on the SPX. And this is Upstart. You know, I'll show you guys these charts. Look at these. Look at this calamity. Last earnings report right here. Gap up. Stock high 96. Today hit 30. If you own that stock and you didn't sell it, saying that, oh, it's a long term, it's going to do fine. I'm like, whatever, man. You know, go hang yourself. Here's Palantir. 125 high. We hit 70 something today. And a lot more room to go on Palantir, actually. Here's SoFi, everybody's darling. What about it? Stock broke down. It's making lower lows. 18 high. Today we hit 9. 50%. Yeah, is SoFi going to be, I don't know, 20 in 5 more years? Maybe. But that's not how you treat this game, man. This doesn't work like that. What else? Let's, you know, all these things are down 50, 60, 70%. Because they have a 3 beta. All the high-tech stocks have betas of 2s and 3s and 4s. So when the market goes down 10%, your stock's going to go down 30%. Pay attention to your beta. Here's Soxel. Here's my headache. We're bouncing a little bit, thank God. Look at this thing. 7 days ago, 22. I did the 12, 10, 11 puts. Stock is 9. I'll be okay. I'm not worried about it. But but again, I'm willing to get assigned. I'm willing to take these shares. That's the only reason I sold the puts and bought the calls. Actually, I did the synthetic. So this is 3-year on stocks. Look at this thing. It's disaster. And here's Robin. Here's Robinhood. Yeah. I love the company. I really do. I think they're gonna be the biggest asset manager in the country at some point, because every YOLOer and hodler, although if they blew their accounts, they went away. There's Robinhood. Let's look at the 1-year one chart again. Vic, I love now. See all these labels. I actually shorted Robinhood at like 48 2 weeks ago. I covered it at 40. I'm thinking it's all good. Today we hit 32. Okay, whatever. No big deal. But these labels that they keep leaving on, like, I don't know how to get rid of it unless I have to do it every single time. Anyway, so here's Robinhood. 67 high. Today we hit 31, down 50%. Great. Well, you get in, you get out, man. You trade. These stocks are not, because everybody got used to this. When Robinhood went from 13 to 65, 5x. If you caught Robinhood going from 13 to 65 and you didn't sell it, and you wrote it down to 35, then gave you a chance at 50 to get back out, you didn't get out, you're an idiot. That's all I can say. Now you trade. So here's Robin, which is ROBN, which is the 2x ETF of what do you call it? Of Hood. Look at that thing. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 days ago. What's the high here? When it was 50? 18 and a half. This morning we hit 680. Yeah, you deal with that? Yeah, well, now actually I'm selling $10 puts. I definitely will take the shares on this if they give it to me. If we bounce, puts will expire worthless, I'll be fine. But again and again and again, there are things to be traded. There are things to be bought and held. Tesla, here you go. What about it? I don't know. It just topped again and it stopped exactly at the 50 MA, rolling over now. Is it going to go? I don't know. Where is it going to go? Is it going to go to 160, 150? Probably. Possibly. I don't know. But all I'm saying is you need to keep your powder dry. Don't fall in love with stocks. Stocks go up, stocks go down. When you look at stocks, like Google's. Okay, Google for sure. Here's going to be my long-term portfolio, which is about 85% cash, is going to look like this. It's going to be Google. 100% it's going to be Google. If Tesla is 150, maybe a little bit of it will be Tesla. Kava, just spread the love around. Well, I sold cash secure puts on this. They expired worthless and now in the money. I haven't sold them yet. I'm kind of nervous because every time you sell a naked put on these things, it goes down 10% the next day. But am I willing to own Kava about like 75? For sure. So I will look at this, Nike. What about Nike? Actually, look at that. It's a beautiful bounce today. It's been in a bear market of its own for the last, 3 years while the market's making all-time highs. So again, I'm not being negative. I'm just trying to be the guiding light for some of you. And hopefully you listen and hopefully you learn. There's any stocks here. AMD. Okay, let's take a look at that one. It even bounced. Look at the thing. New low now. Look at that downtrend. It's a downtrend. It's under its 200 EMA, under its 50 EMA. Don't touch these things. If you're a trader, by all means, get in, get out. If you're not a trader, no bueno. All the stocks that I wanted to buy, they broke down so hard. My Chinese stocks absolutely getting smashed today. I don't have any, but thank God, I was thinking of getting back in. But because now today China said F you to the Trump and saying we're putting tariffs on, their stocks are getting smashed. Baba, love Baba. Alibaba, love Billy. Look at that thing. Actually, I should buy some Billy. I mean, it's into, yeah, definitely. It's going to be one that I buy. Baba is another one. So there's a lot to buy. Kid in a candy store. But you can't go blow your cash, shoot your wad all at once. You need to be patient. You need to be careful. So, yeah, that's where we are. You know, Google is definitely going to be one of the ones that I'm going to get in. So where are we on the SPX? Did we rally? No, we're not going to rally. I mean, we're going to have another crash on Monday. Yeah, we're just not going to. Another gap down, and then we'll bottom. Hopefully we'll bottom. Maybe we'll bottom about 5,000. And then I can do some cash secured puts. I mean, not cash secured put credit spreads and things like that. So I'm going to answer some questions. I know it's fast today, but I apologize. I have other stuff to do. And we'll move on. And I'll come back on Monday, do it a little bit longer, trading with Sergio. I'll put some of you on. You can explain to me and tell me that you didn't blow your account. That'll be awesome. So that's where we are, people. You know, hang in there. You know, shit doesn't, you know, shit doesn't hit the fan all the time. See, Marcia says, now, how are you 90% cash if you have Nike, if you have Walmart? Then you must have like 8-figure account. Morning and what the fuck? Yeah, exactly. There you go. Well, that sums it up. I think we'll end it right there. If you guys don't have any other questions, please, you know, you can email me. My email is sergio@sergioavadian.com. Thank you for the support. Good. I'm glad. I'm 100% glad that you didn't. I know you're suffering, but I hope you didn't blow it. And here, let's end it with this comment. I think this is a wonderful comment. These are the times when fortunes are made. Just prepare the cash. Choose the right time to step in. Okay. For now, BTC all the way every day. I don't know about BTC. You know, Monday, you won't be happy with BTC because it'll open at 75,000. But I do have BTC. I believe in BTC. So there you go. Then Monday, Trump will say, no, Trump is not going to say that. Trump is not that type of guy. He's too proud of himself to say, okay, you know, I'm just kidding. April Fools. It'll be April Fools next year, not this year. Trump is hell-bent on doing what he's doing because if he's going to hand it over to JD, he has to say, look, we fixed everything. Deregulate. You know, it's good for corporate America. Deregulation is good. That's how they're going to grow the economy. That's what they're going to do. I mean, it's pretty simple. I'm seeing this picture. Hopefully, you're all seeing the same picture that I'm seeing. Deregulate, drill, baby, drill. You know, cut the government workforce by 30-40%. That's it. They're going to run the country like a corporate America does. And is it going to work? We're going to find out. The markets right now, not liking it. I haven't had time to look at the market. Market down another 5% today. Losses, yes, but I'm not suffering. Well, thank God. Thank God somebody's learning. Well, anyway, guys, much love to you. Please be safe. Please stay healthy. It's only money. Don't get upset. You know, I could be harsh sometimes, but then I love you all. I hope you guys are keeping your powder dry. I'm not telling you to follow me because I sure lose money too. Like today, I'm losing money. It's okay. But I what I do is I have commitment, right? I'm not wishy-washy. I commit to something and I follow through. I structure the trade. I suffer with the consequences once in a while, but most of the time I'm okay. So yeah, that's it. That's what you need to do. You need to have a commitment. Like I'm committed to buy SOXL at $10 minus $2 premium at 8. I'm committed. Why am I committed? Because I think there'll be a bounce. If there is a bounce, it goes back to 10. I can sell covered calls. I can do many things. I didn't buy it at 23 last week. I'm paying 10, 11, 9, 8, less the commission. Not the commission, less the premium. Same thing with ROBN. Could Robinhood stock go down to 25 and Hood goes down to 6? Yeah. But my buying is going to be right about $8 a share. I'm committed to buy it. I have the money to buy it. I'm going to buy it. And I think on a bounce, these will all work out. As a trade again. Will I hold this for the next 3 years? No. Robinhood, the stock 35. Will it bounce to 45? Okay, yeah, it will. Will it bounce to 40? Yeah. And then if I need to get out, I get out. Make a little bit of money and get out. That's where we are right now. You can't buy things and say, I'm in love. Now, you want to buy Google in your retirement account for the next 5 years, 8, 10 years? By all means, start buying now. I think Google is the cheapest Mag 7 stock. I think you can buy that. You should buy Nike. Maybe you should, like at $50. I think is pretty good deal. What else? Yeah, that's it. You just need to keep your powder dry. Always have some cash. for markets like this. Okay. And I will see you guys on Monday. Please stay healthy, be safe. Much love. Let's go battle the rest of the day. I enjoy these types of markets, by the way. It kind of goes, it makes me a little tired because I'm focusing so hard, trying to do the right thing at the right time. But I love it. I still love it. I still get up every morning like a 23-year-old trader on Wall Street because I know how to do it. I know how to do it well, and I enjoy it. Am I enjoying today? No. Am I enjoying losing like 4% of my account today? No. But it's okay. I'm going to set it up, structure it, suffer the consequences, or make money with it. But I do know when to cut losses, though. And yeah, to make it is easy. To keep it is hard. Much love. See you guys on Monday at Trading with Sergio.